Hey, what's up, guys? Crypto Keith back here for the Senate hearing going on in the United States right now. We did part one, part two. It's a long video, so I've been splitting it up. And I know I said I wasn't going to do an introduction, so I'll make this very quick. So they're talking about cryptocurrencies and you know, what kind of regulations, laws. We've heard them say things like they get angry because people are taking advantage. ICOs make them angry because they are clearly securities, or a loophole around securities where they do not have to do them in traditional ways. So they're really trying to create laws, trying to figure out what they should do. They definitely want to do something to create guidelines, regulations. They already have many committees and education going on all around the world. This is really going to affect because whatever happens is in this Senate hearing, we know that the United States has reaches in other parts of the world, and when the United States makes laws, they usually other countries usually follow suit. Although with cryptocurrency, it is all over the board. There are some countries that are for it, some that are more against it, and the ones that are against it risk losing that economy and money coming into their country. We do see after this, you know, there's different people in this meeting, in this hearing, people that look at cryptocurrency different ways, which is good. But they could have thrown in a couple extra people in this debate that understand cryptocurrencies more, that live in it. It's really biased in that sense. There is one person who is, you know, pro cryptocurrency. His niece owns Bitcoin and is a holder, a hodler, as he said. But really, they're worried about bad actors, you know, luring people in with high returns, high promises. Then going out and spending that money on, you know, nice things for themselves, and people, you know, mainly older people being attacked and targeted for scams are losing their entire retirement funds and things like that. Also, older people are an easy target because a lot of them don't have the retirement fund they need. But this is not just cryptocurrencies. This happens everywhere, you know, where the government, even taxes, you know, a lot of scammers use taxes and government pretend to be governments. So just because scammers are pretending to be cryptocurrencies doesn't make cryptocurrencies bad. Scammers pretend to be the government and the IRS, calling people, asking them for money they owe, right? So again, just because cryptocurrencies can be used in some crimes does not make them bad. Cell phones are used in almost every crime committed, and they are not banned. Cars are used to smuggle drugs, airplanes, and we don't ban those. They're just tools that criminals use. So cash is one of the most used tools for crime. Cryptocurrencies are actually more traceable, and all transactions are in a public ledger. So what they were saying was, you know, a lot of these exchanges need to be under more stricter, basically watch. They need to watch these exchanges to make sure that because a lot of them have been hacked and the security risks are a problem. So there's a lot of stuff going on in here, and you can really just see from watching the first part, the second part, and now the final part. We'll try to do this all in one video, but it's going to get kind of long. It'll be about 40 minutes if we do the whole thing, so I might split it up into 2 more parts. But let us know down below in the comments whether you think there's an attack going on cryptocurrencies right now by governments, whether they're trying to destroy cryptocurrencies. If you like what's going on in the Senate hearings, hit the like button. If you don't, if you think this is a bad thing, hit the likes down. So really, they're going to have more, after this, they're going to have more abilities to, you know, legal abilities to confiscate money, to control, to, they're going to have task force task forces, and one thing they talked about was pump and dumps. This was a comic, basically kind of like a meme, drawn a couple days ago or today. I found it today that shows the stock market and the Dow is crashing as well as cryptocurrencies. Guys, do you think this is an attempt to make cryptocurrencies seem like they're not separate from the stock market? Because really, one of the main features and goals and one of the benefits of cryptocurrencies, and actually the reason they were created in the first place, was to avoid what happened in 2008 with the stock market crash. So wouldn't it be convenient to crash the stock market and then also crash Bitcoin to show people that it's no different, right? If you think this is the case, hit the thumbs up. I might throw in Superman every once in a while when I think they're getting a bit negative, just to brighten the mood up a little bit. And they were saying that a lot of people trust in these cryptocurrencies maybe too much, and they're not reading the terms and conditions. And that's one thing that was talked about in the last part. So what's the use of having these terms and conditions? They really only help the lawyers. I don't see that as the case, because a lot of times when you go onto an exchange to buy cryptocurrencies, they've already done a lot of things where right on the home page it says buying any cryptocurrencies are risk. You could lose all of your money, and this is what the governments have been forcing exchanges to do. So some people are not satisfied with the current regulations, laws, how things are being run, but other people say they don't want it to change. They see it being okay right now. ICO scams being something that I too believe, if there's one thing that needs to be addressed, is these ICO scams. Now, I do not think ICOs are securities. A lot of them are not. They're utility. But they're saying if you buy a coin and the value of that coin, expecting the value to go up in that coin and you to profit, then that's a security. And we mentioned in the last video the reasons why the Securities Exchange Commission has incentive to call all cryptocurrency securities, because we've seen them freeze different cryptocurrencies assets, and really that's money that they get and that they can use for different things. So really it's about, a lot of this is about greed. So you got to understand the motives behind what's going on here and not just take it at face value. So let's get into it and watch the other part of this video. Right where we left off. And if you haven't watched this one, I suggest going and watching part 1, part 2, and continuing on. But it's not that important.
It's a disclosure. It's false disclosure. And false disclosure is often fraud, and I think we need to step in there. But just in terms of discussion, as Chairman Clayton mentioned, we have begun discussions at FSOC. In addition, there's also been discussions led by Chairman Clayton at the Financial Stability Board, and also at IOSCO, which is the International Organization of Securities Commissioners. So these discussions are taking place at the right levels of debate, but there's so much more to be done.
And again, to my friend from Louisiana point, we've got this, we're focused on a lot on Bitcoin and crypto assets, cryptocurrency. And I think there's even definitional issues here. But you've got a whole new platform called Ethereum where they're creating, file sharing or extra computer time. I'm not sure what kind of assets those fall into. Are they potentially regulated within your realm, or if there is a trading exchange, a tokenization exchange between excess computer time. I'm not sure where that fits at this point.
The definition of a security, I believe, the people who wrote the 34 Act and the 33 Act, they were smart. They did it on a principled basis, and they basically said, if you're giving people money in exchange for a future development of a business with the hope of a return, and whether that return comes in the form of server time or your ability to sell server time, it's a security.
But there have been, and I concur with the approach you've taken in terms of the ICOs, and I think there's been some very bad behavior. Yet certain ICOs, the SEC has not stopped, others they have stopped. You know, are you going to go back and re-review the ones that have gone forward?
Let me say another thing about the 33 and 34 Act. When they were written, there was a great recognition that there was a tremendous amount of securities activity in this country, and that we were going to rely on gatekeepers to help us enforce those, and liability to help us enforce those rules. Accountants, lawyers, underwriters, sellers, and the like. I'm counting on those people to do their job, and I've made that clear.
Let me ask Chairman Giancarlo, you know, what we did, and one of the things I'm concerned about was that I think we may have moved too fast on allowing, for example, futures trading on Bitcoin. And I would just wonder, you know, you've allowed future trading contracts on Bitcoin, yet the SEC has not allowed ETFs. I'm just worried that we need a much more coordinated effort, because I think the potential writ large amongst crypto assets and the underlying blockchain could be as transformational as wireless was years ago. And I think we're going to need a much more coordinated effort. I know my time's expired, but if you could both quickly comment on that, I'd appreciate it.
I believe it is critically important that we coordinate on this. I believe that we are all both individually and collectively understanding our authorities, understanding this new technology, working around it. There was a communication amongst myself, Chairman Clayton, the Treasury Secretary, and others in connection with Bitcoin futures. And, you know, Bitcoin futures have done are quite different than the Bitcoin market. The Bitcoin is an anonymous area. Bitcoin futures is fully transparent to the regulator. Bitcoin retail. Bitcoin futures, mostly institutional and high net worth. Bitcoin futures regulated. Bitcoin futures regulated. Bitcoin unregulated. And with Bitcoin futures, we're now having visibility into underlying spot markets and data from those markets that we would not otherwise have.
Completely agree on coordination. Like I said, I break it down into 3 areas. There's this great technology that I agree with you has promise. There are these pure cryptocurrencies, which we need to take a look at across FinCEN, Treasury, CFTC, Fed. And then there are securities offerings that are called ICOs that should be undertaken as securities offerings, consistent with our regulatory regime.
Senator Cotton.
Thank you, and thank you, gentlemen, for your appearance today. I want to continue on a line of questioning that Senator Warner began. So putting aside Bitcoin or other kinds of cryptocurrencies that are based on blockchain or distributed ledger technology, what are your thoughts on the potential value of that underlying technology of blockchain and distributed ledger technology, both to enterprises and consumers and perhaps to government agencies?
It's important to remember that if there were no Bitcoin, there would be no distributed ledger technology. It grew out of that technology initiative. And the potential applications, and by the way, I'm no pie-in-the-sky dreamer. I just report what I read, but the applications range from enormous potential in financial services industry and the banking industry, but right down to the way charity dollars are spent, the way perhaps refugees are accounted for across the globe. There was an article just this morning about the use of distributed ledger technology for 2.5 billion people around the world who don't have access to banking services. One of the areas that, in our own area of agriculture futures, 66 million tons of American soybeans were just handled through a blockchain transaction by the Dreyfus Company. For sale to China. So Bitcoin is now being used. It's used in our American transportation and logistics system. And most importantly, the potential of distributed ledger technology for regulators to be able to do really close market surveillance. And if it had been available in 2008, if we had been able to see the counterparty credit exposure of one bank to another bank in real time with precision, that would have enabled much more precise policy choices that had to be made in a rush without good data. So I think distributed ledger technology has got an enormous potential. Now, how it will be realized, when it will be realized, what are the other challenges in it, those we can't say, but the potential seems extraordinary.
Thank you. Mr. Clayton?
I agree that the potential seems very significant. And just look around anywhere in our economy where verification and record keeping has cost that is potentially reduced. Is an opportunity for this technology. That's just one of them, and I hope people pursue it vigorously.
Thank you. Let's turn our attention now to cryptocurrency. To Bitcoin, since it's the most prominent. Yesterday, the Dow Jones had its single largest decline in a point scale, 4.6% as a percent, which is high, not the highest ever. That obviously generated a lot of news coverage. The dollar has faced 2% inflation or less now for many years. Bitcoin, however, has seen a 32,000% increase in its value over the last 5 years. It's declined by some 60%, I think, in just the last 30 days. What are the factors driving that kind of extreme price volatility in Bitcoin relative to securities of public traded companies or the U.S. dollar?
Well, just recently, the volatility we've seen in Bitcoin was not as large as volatility we've seen in some other asset classes, such as the VIX product, which is known as the fear index of volatility gauge. And so we have seen extraordinary volatility in Bitcoin, but in our world, in commodity derivatives, we're used to volatility in asset classes, and that's one of the things that the emergence of a futures product is meant to do, is to provide those who are exposed to that volatility a means of hedging and mitigating the risk to that volatility.
Mr. Clayton.
I don't really know what's driving the volatility in Bitcoin and cryptocurrencies. They're not correlated with sovereign currencies, so it must be something different from what would drive the dollar. But that's one of the issues before us, is there does appear to be a lot of volatility compared to the medium they are supposed to be a substitute for.
So what does that kind of volatility portend for cryptocurrency's future as a potential alternative to legal tender of nation states, or in the EU's case, a transnational organization?
You raise a great point. Now, maybe that volatility tamps down to a stable, but an asset that is highly volatile is not a very effective means of exchange, because you don't know how much you're getting by the time you receive it, or how much you're paying at the time you have to pay it. If you agree a price on day one, but have to source it on day 10, you expose yourself to significant risk.
Thank you. My time has expired. I do want to associate myself with the remarks of Senator Donnelly at the end of his remarks about the risks that cryptocurrencies are currently posing as a way for rogue nations, terrorist organizations, criminal organizations to evade sanctions, not just in trading, but in hacking as well, as we've seen media reports from North Korea. So I'm glad to hear that you are working closely with our law enforcement and intelligence agencies, and I hope that continues. Thank you.
Senator Menendez.
Thank you, Mr. Chairman. Thank you to both, and it's good to welcome a fellow New Jerseyan in your role, Mr. Chairman. I have been actively following both Venezuela and Russia's interest in developing virtual currencies for the purposes of evading U.S. sanctions. Last month, I sent a letter to Secretary Mnuchin on this subject, and I asked Undersecretary Mandelker about this a few weeks ago when she was here before the committee. Under what circumstances would the SEC and the CFTC have a role in engaging or regulating the proposed new petro or crypto ruble currencies? More broadly, does the SEC and CFTC have a role to play in preventing the use of digital currencies by foreign governments to evade U.S. sanctions?
Our jurisdiction should be very limited in that area, Senator. We have, as I've spoken about before, we do have enforcement authority for fraud and manipulation. And so if we thought that that instrument was being used for fraudulent purposes, manipulation purposes, we would not hesitate to take authority. But this, you're probably touching on an area where the jurisdictional lapse is probably greatest for the two agencies sitting before you today.
And so, let me ask you, manipulation, what if you're manipulating to avoid U.S. sanctions?
You know, I'd have to speak to our enforcement counsel to see how that fits in, but we would certainly look at it, and if...
I'd like to have you do so, and I would love to hear back through the committee. Are you interacting with FinCEN to the extent that you may have limited jurisdiction? Are you adequately integrated into the financial regulatory network that watches for illicit activities, or are there gaps that could create vulnerabilities?
Yeah. So as we mentioned before, Senator, Chairman Clayton and I are part of a virtual currency task force that is put together by the Treasury Secretary that includes the Fed and FinCEN. And we have already had our first meeting, beginning meeting to set out some work streams. We will have more to come. And it just so happens that I'm actually meeting with FinCEN's virtual currency team this week on a previously scheduled meeting to get some introductory discussion started of cooperation between our agencies. And so I look forward to actually asking them this question as well.
Okay. And I would just say to both of you, to the extent that you have a role to play and you lack the present authorities to do so, I would love to know about that if you determine that is necessary, because I get my sense of cryptocurrencies largely driven to evade U.S. sanctions and to undermine sovereign currency. Both of them are a challenge to the national interests of the United States. Let me ask you this. We've seen a dramatic increase in the number of initial coin offerings where private companies are using digital tokens to raise money instead of going through the capital markets. The Wall Street Journal reported that initial coin offerings grew from about 96 million in 2016 to over 4 billion in 2017. Many of these ICOs are relying on celebrity promoters to gin up the sales. For example, last year, Floyd Mayweather, the boxer, used Instagram to promote the purchase of Centra tokens. Now, I've done extensive work on consumer protections in the prepaid card space, where we've seen celebrities like the Kardashians use their status to sell products that come at a steep cost to consumers. And this feels eerily similar to that, just the next avenue of exploitation. And I worry about unsuspecting investors that don't have the resources to understand the true risks. What can the SEC do to better protect investors who may be persuaded by celebrity promoters to purchase tokens offered in initial coin offerings without fully understanding the risks?
Senator, I'm not going to comment on a specific instance, but some time ago, we put out an alert that said, if you are promoting securities, you're taking on securities law liability. I believe that has tamped down some of this endorsement activity. I will say it again right here. If you are promoting securities, you're potentially taking on securities law liability.
Well, let me ask you, I appreciate that, and I hope that you will think about doing more to protect consumers. Can you walk us through
guys,
why the SEC at this point is not comfortable
if I can get this to pause, we're going to take a quick
with
break.
approving ETFs?
Every time I try to pause it, it freaking restarts. There we go.
With significant investments in cryptocurrency?
I'll just turn the volume off. Okay, guys, so that is the end of part 3, and we're going to finish it off with our final and 4th part to this live stream. Guys, it's stuff you guys should know that's going on. If you're into cryptocurrencies, you should understand the laws, the regulations, what regulators are trying to do, and you can make better financial decisions based on what is happening. If a lot of people knew that all these regulations were coming, like the ones we've seen in the past week or so, they would have been able to prepare better for this crash, right? So I think it's very beneficial to watch this. It might be a little bit boring, but it's definitely beneficial and one of the most important things you should watch if you're in cryptocurrencies. Not the most important, but you should definitely understand the side of the regulators and the side that's against you know, what we're doing and what we're investing in. So guys, thanks for watching. Again, smash the likes up if you think this is beneficial. Smash the likes down if you guys think this is nonsense and you think this is negative and a lot of these people are politically motivated or have their own agendas. So we'll start up with part 4 in just a couple minutes, guys. If you're not watching live, you can probably find it on our channel right now. So we'll see you guys in a little bit.